All right, well, welcome back to another market update. Today we're discussing the real estate market stats from the month of October. For those that don't know me, I'm Darren Langell. I'm the CEO of our company, Redline Real Estate. This is something that I do every month for our agents and then again, the general greater Calgarian. For those that continue to tune in each month after month, thank you so much. It means a lot. Today's message is a question, and it's, are our sales falling back just like our clocks just did? In general, as we ease towards the holiday season, I've said this before, we do expect a drop in sales activity, and we also expect an inventory easing as we trend towards like the middle of our cold months, December and January. So as we expected, we did see one of this. We saw the inventories really start to drop off, which is what we're hoping to see. But on the other side, we actually saw a bump up in sales. And this is something that you're not going to hear in regards to the media that's already come out about our sales figures being somewhat in the mid 1990s. Nobody's talking that October actually had a bump in sales over what we had in September. Let me just pull that up. This will be graph number 1, and I can show you this, and I'm not fibbing. And if you see there in the graph that there's that little box, you can through my finger, and you can see that we actually went up. I think it's 1323 from something in the 1200s. We bumped up in sales. So hey, there is nobody on the planet that can say that this isn't a good thing. So that's the first item I wanted to hit on. Now let's go into graph 2 to talk about how October was in relation to other Octobers and how did this feel? Most of the time this year when I've pulled up the graph, we've seen that this current year versus others have been way out of balance. We've been lowest over and over again. But look at all the arrows I put in on this graph. Boom, 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 boom. There's a lot of arrows that are showing us that, hey, October felt like a lot of other Octobers, and it wasn't this really super sleepy month that most of this year's been. So that's something, again, nobody's talking about. They're talking about sales as low as 1990s. But here it is. The reality is it's actually feeling somewhat familiar. After talking about sales, again, we always follow this up with just speaking about inventory. I've got a graph I'm going to bring up a little bit later, but not yet. But let me go and talk about in general where the sales were and where we sit here to date. So number one of my key facts is yes, despite October having a bit of a bump from September, we are sitting 13% as a whole less than we did at this point last year. So again, we are still battling 2017. That isn't changing. Now, again, I'll precursor this probably throughout. Depends on the market type, the location, the price range. But as a whole, we're still lagging. And the second point is that inventory story. That inventory still does remain too high. We will pull up a graph. I'll show you this about that now, and we can dig into it. So what we're seeing as a whole, sales were down 13%, but now the flip side as a whole, we're 23% higher. So you can see that red line across, you can see my hand there pointing towards you where I want you to look. We're not the highest inventory situation we've had in, say, the last 10 years. We've had some of that already. The last few months were like that. But look, there's 3 months of the last 10 that are sitting at this level. But sure, none of them with the sales level as low as it is today. But you can just see what that is. Now I also want to queue up into the graph 4 that I've got here to just talk about months of supply. When we talk about sales and then inventory like we just did, the next is always months of supply and what that's affecting. And what I did is I created a red line here that goes across the graph. And that is kind of our great equalizer. That just shows as a whole across all the districts, across all the market segments, that the months of supply is quite elevated. We've got, I think it's about 4 months, maybe give or take a little bit more. But for simple math, you can see things aren't happening fast. And that's just kind of what I wanted to hit on this graph for and nothing beyond that. The third point before digging into the specifics is along with seeing all that, we did see a 3% benchmark decline year over year across Calgary and area's total sales. Now, again, that does change across all the different types and prices and everything like that. But we also saw a sale price to list price ratio drop a little bit more as well. So people are getting a little bit more of a discount on the properties than we might have seen at this point last year. It's slightly under 97%. So that means you're getting about 3%, a little bit more on average off of the list price. Now, when we speak about different areas, different price points, we also have to talk on the different segments, which is detached, apartment, and the attached. So quickly, they do paint a different picture. So I'll hit on those quickly for you. Detached market, it's seen year over year sales down for the month of October, about 9%. New listings, though, did come off, like I told you, around 6.5%. And then that days on market, that months of supply is affecting that. It's still bumped up. We're up 30% days on market in the detached versus this time last year. So it's just under 60 days on market. As a seller, you need to know this. And then for detached, the overall market is seeing that 3% decline. But the biggest thing in the detached world is the sale price to list price ratio. It's actually dropped almost a full 1% from what it was last year. So again, the deals are happening in the detached market this year, where it used to be and has always been the strongest market. The apartment segment, a little bit different. Sales in October were down 10% year over year. New listings did come off as well. That's good news. And days on market is up. It's higher than the detached. It's at about 70. But what you need to know is it actually hasn't gone up nearly the difference from last year to this year. We're basically seeing it flat. So it's about the same market as it used to be. No real changes because it's the one that's been fighting back, and I keep talking about that. Then again, attached, that's the semi-detached, the infill tile market, and the rows. Again, they have slightly different picture to paint. Sales in the semi-detached were down 12%. New listings went up this month. Hear me? Up. The other two, detached apartment, have all gone down. This one went up. So you're seeing even increased inventory, which is not going to help for people trying to sell. The row housing market, it also saw sales decline, but by about 17%. That's the market I spoke about last month, having a big turnaround in the negative direction. New listings did drop off though because September had a huge bump there, and it's nice to see that that's eased. Days on market, again, 64 days on market. It's up about 20% over last year. Now, if we wanted to speak about specific price ranges, this does matter because it does adjust so much across the spectrum. When we're talking about price ranges, we're again going to talk about that luxury and the ultra luxury market. It again has outperformed last year. It's again that market segment that continues to push along, is less sensitive to the fluctuations in our economy, and it is still doing much better than we've seen it do last year. So it stays strong. The other one I brought up last month was that very average price point, the $450 to $499, and it actually had a resurgence. It was nice to see that average price point was actually starting to sell a lot closer to prior years, and that's got to be a good news story. This month, again, it was the closest to last month other than that luxury band. So again, good news story. Let's keep hoping that average band continues to sell and there's confidence in that market. We'll watch, learn, and I'll be here to report back to you. So those are the two things that I really saw come out. The market that's being impacted the most is really that 600 to 900 band. It is seeing 22 to 28% off of last year's figures. So again, that's that infill market I talk about a lot. It is having struggle. It has an incredibly high inventory. And there's this one piece of stats that I pull up every month, but I never talk about it because it hasn't created any alarm bells at all. But what it is I run this stat that talks about how last month was in relation to the entire year's sales. And if it's close to what you'd think would happen. Well, what we saw is that there was two market ranges that did considerably worse than they should have done based on their sales in a given month. And those price ranges were this million to million two five. It actually only saw 6 total percent of all the sales this year happened in that month. Now we just had 10 months go by. So that means every month has been 10% of the year to date. This month it only had 6% of the overall sales. So we've seen a really big drop. The other one that was almost same to that was that 8 to 8.99. That's that sweet spot of inner city infills, both all over the northwest and the southwest. The whole core, that infill price range has really taken a little bit of a beating. And when we run our market stats, we know over and over again that it's having a hard time selling. And it doesn't alarm me to see that market segment specifically is doing way worse than it really should. Okay, next is the hottest market segments. And again, I watch this as a whole. I'm not going to go into the details here, but what I want to bring to your attention is sales to new listings. This is a ratio that I run. And as we go slower into the year, we'd expect the sales to new listings ratio kind of slow down. Less sales happening in relation to the new ones hitting the market because of the time of year. But across all things, detached, apartment, semi, and row, we actually saw quite a spike in the sales to new listing ratio. So this is two things. We had a bump in October sales over September, which means more sold, and naturally we have less inventory coming to market. So it's a good thing. One of the areas we saw something in the range of a 15% difference from last month to this month. So if it was selling, say, 44% of overall sales happened to new listings, it bumped up to 59. So those are big shifts. Those are real numbers that as a seller you would feel the impact difference, and hence why October looked a little bit better. Again, I'm talking about best performing markets for price point. Again, as a whole, I'm not going to go into many more detail, but it was about 3% decline year over year. Some market segments are a little tighter, but again, reach out to us for that information. Hottest communities. Again, I break this down into two things. Months of supply, so how quickly can we get through all the inventory, as well as that sale price to list price, or sales to new listing ratio. So let me go right into the months of supply. There was only 5 markets in the entire greater Calgary area that saw its months of supply at 2 or less, which I'm going to consider hot. And that was Mayfair, that was North Haven, Millrise, Riverbend, and then Albert Park's Radisson Heights. That was it. When we go to the hottest communities in regards to sales to new listings, because we saw that uptick in October, there's actually quite a few. I think I've got 1, 2, 3, 4, 5, about 20 communities that sold more than came on the market. So that's a great news. And some of the small towns like Irricana and Nanton actually sold nearly 3 to 1. So if you're in those satellite mini communities, again, there might be some hope for you here into the late part of the year. But again, there's a full list. If you want more of this stuff, just comment below because I'm going to be able to get it to you. It's just I don't want to bore everybody listening here today. We'll whip over quickly to buyers. What does all of this mean to buyers? The biggest thing for us to note is if you're really in the market to buy and are searching for the best option for your family, for your position in life, whatever it is, you've come to the best opportunity you'll have. This is the kind of the end of the ropes as far as a great amount of inventory to be looking at, because we're going to see a massive drop again in November and then into December, and it really won't perk back up until February and onward. So don't be surprised if, as this is happening, that favorite home that comes to market might be gone if you don't take action on it, even though we're calling this a quote unquote buyer's market. Let's look at this graph. I'm going to pull this up, and what this is what is the sale price to list price ratio you're getting as time goes on the market. And this justifies me wanting to say, if you see that nice home, that one that matches best, go for it. Get on it, because other people are doing it, and you're going to have to be okay to pay pretty close to list price. Now, if you are playing, in the casino a little bit and you're hoping that that thing will sit on the market, well, the reality is as it sits, you'll see the price you'll be able to get better and better. But again, what is it worth to you? Do you want to gamble for this and hope nobody else snags it? Or do you want to just go for it and get the home that your family deserves, that works for you? You know, that's something you'll have to decide. My gut is don't bank on it being there, even in the slower market, because I'd hate for you to lose the one. It's a difficult thing to find once again. Now for sellers. I love November actually for sellers. Sales stay steady. Inventory declines another good amount this month. And there's this last minute push by buyers to get in before Christmas. Urgency on the behalf of a buyer is a good thing for sellers. It's the only time we've had it all year, and it helps that supply demand, and it will turn it actually into your favor this month. So again, not to bank on it, but it's reality, and let's hope that that works in our favors here as sellers. If you are considering going on the market, do it right away. Do it right now while others are pulling off, and you'll look shiny and new right around this buyer urgency. If you're on the market now and still frustrated, consider that price drop, right? Get on it. And these last 30 days before Christmas is a fantastic opportunity to take advantage, again, that buyer's urgency that we have and we haven't had all year long. For everybody else, not buying or selling, I don't have a lot to tell you. What I can tell you is that I'm going to continue to watch this inventory and this sales. I'm going to be watching this, so we're going to tell, that story is going to tell us if into the new year we can expect price changes on our overall equity position. That's really it. Right now, we're on a downward trend as we typically are at this time of year, but where we sit in January will tell the tale about what I expect the spring market to look like. So stay tuned for that if you're curious and you've got even a short-term outlook on something coming in the future. So that's about it. I've hit you from every angle I can without hopefully putting you to sleep. Thanks again for spending time with me on the monthly report. I hope to see you here next time, or even hopefully sooner. Come into the office, come and join us for a beer, because we've got Bourne, Colorado Brewery has sponsored our beer tap here at the office this month, and we can't thank them enough. So come in and enjoy that with me or one of our Redliners. Have a great month, and we'll talk to you very soon.